What's up, guys? It's June 20th, 2025. Looks like we had a bearish day, a bearish open into a trading range. Pretty cool day. I took one trade. I caught the leg 2 down here. I took it on NASDAQ, so I'll show you that in a second. I want to give a quick shout out to the new members and subscribers. I appreciate you guys tuning in. And one of the Discord members today hit me up. He said I can give him a shout out that, the breakouts are working. My name is Ding Dong in the Discord if you decide to join. But he's still to say that, he requested his first payout from Top Step being 3K. So that's just great to see that it's working. I hope you guys are also making money. Hit me up in the Discord. The link will be in the comments. I'm going to be dropping a couple more membership videos this weekend about how I find my trades and the context behind my trading. So let's get into it. Weekly charts looking nice. I've been thinking about swinging an options contract, but I told myself I'm not going to trade options until I have a decent amount of future accounts. So, weekly chart, daily chart. Weekly chart's starting to have bad follow through right around the breakdown point here. Bulls are in their third leg, so that gives more weight to trading range behavior. If this is the high of the trading range, we are at trading range highs, and now bears want to bring the market back down and get a big leg 1 pullback, leg 2. Bulls want this to just be a shallow pullback and end up creating a new high for the day. Or excuse me, this is not the day, this is the weekly chart. So they just want a new high. For the leg count for the bears, leg 1, pullback, leg 2, pullback, leg 3. That's a wedge bottom in a bullish market. And then look at the rally. For the leg count for the bulls now, leg 1, pullback, leg 2, pullback, leg 3. Or you could reset it from the breakout. Leg 1, pullback, leg 2, pullback, leg 3. That's a wedge top in a trading range. So now you can kind of see both pictures here and why there's a good reason to buy or sell. The markets are generally 50-50. There's always a reason to buy and sell every bar. However, when one side is trapped for a brief moment in time, the markets are not 50-50, and that's where we look to capitalize on. That moment in time is trapping traders, so bulls will be forced to sell out of longs, bears will be forced to buy back shorts, and that's what creates the energy behind a leg 2. Daily chart, again, we got multiple legs higher. Leg 1, pullback, leg 2, pullback, leg 3. Trading range right here, it breaks out. Bulls get another 3 legs, leg 1, pullback, leg 2, pullback, leg 3. Trend line break, trend line break. That's how I counted the legs because they're all the same color. So they're all bull bars, but I'm counting trend line breaks. So leg 1, pullback, trend line break. Leg 2, pullback, trend line break. Leg 3. Bad follow through in leg 3. Now we have a bull channel against the bear channel. That's trading range behavior. Touch the EMA, and now we're on a broad bull channel here. We can also count 3 legs higher. Leg 1. So this is the start. This is the bear spike. This is the start to the bull spike. This is the high of it. Leg 1. Same time the bull spike is ending, the bear spike is starting. So this is the pullback. Leg 1, pullback. Now the new spike starts. A couple ways to count this. You could count it here. So leg 1, pullback, leg 2, pullback, leg 3. Sideways behavior. And that's just counting opposite bars and spikes. Or you could count it at a new high. So you could say leg 1, pullback, leg 2, new high, pullback, and bulls are failing to make that new high for leg 3. Today's bar right around here had a bad close on the EMA. Looking at tail, we got a tail. So that's showing us there are buyers below the EMA. Problem is just 3 bear bars in a row. These 3 bear bars, it's 1 bear bar closing on its low, and then we have 2 more trading range bars, but they close bearish. So it'll be interesting to see what happens in the upcoming weeks, whether we're in a bull trend pullback or we're in the high of a trading range and we're going to sell off. Either way, both scenarios offer leg 2 setups, and that's the most important thing. Someone asked me a question in Discord about how do I know what side is going to break out? And I replied to him and said, I don't know what side is going to break out, but I've done enough back testing to know when the breakout occurs, I know where to enter. That was the gist of my answer. I think that's really important to understand that we're not in the business of predicting. We're just reacting. So we see a strong breakout. This is the one trade I took today. Gap up, bad follow through, bar 3. Good 1, 2, 3, 4 bear bars in a row. I was trying to sell up here, tried to sell the 50% mark. Now I saw the breakout here. Now this is a bad close. There's definitely buyers down here. I wanted to see how quick these bulls would be trapped. When I saw this bar almost hit 1R, I was like, you know what? We could retest that. So I threw an order up here. So I get filled on this bar. And right before this bar here, what bar is that? Right before bar 10 hits my entry stop loss target was right here, this lower blue line. Right before that happened, I went for 2R because the context was good. Breaking out below the higher time frame EMA, being this one. Crossing over. Bulls are failing. This is a breakout bar. It's reversing. Reversals are a form of a breakout. So I went for 2R, and I caught 2R very fast within 1-2 bars. So filled on 9, quickly dragged my order down to 2R, got filled right around here on bar 11, and I just called it. I did really good on the overnight session. I didn't want to push my luck. So that's the trade I took. I forgot where I was going with that. But yeah, let's get into the breakdown. So anyways, gap up, bar 1, bad for the bulls. It does have a tail, but it painted bare body. This could be some sort of a pullback. Well, it is a pullback. The gap up is the breakout bar. Bar 1 is a pullback. And then we see the second leg from the low of 1 to the high of 2. Leg 1, pullback. Leg 2, pullback. Leg 3. Leg 3, taking us to the swing high of yesterday's 63. It's follow through, but it's not a lot of follow through. And this is becoming climactic. And it's a form of a third leg. Bar 4. Big bear bar closing on slow, and it creates a gap of bar 5. So now we know bulls are trapped. It's a bear. Bulls are trapped right here. That's good for the bears because we know that when price comes back, bulls are going to try and get out at break even. What's better for the bears is that then bulls never got their break even price. So the momentum here was picking up. So bulls had to, unless they held down here, if you're a bull and you held down there, you're strong. And even that didn't come back to the 50% mark. So let's assume bulls buy the high of 2, buy high of 3. They see bar 4, now they have to sell out of a losing position. Bears are selling the breakout. Bulls are selling out of their losing position. And now we're looking for a pullback to start our position to leg 2. Bar 5, bear bar bouncing off the EMA, but it's followed through for bar 4, so that's good for the bears. And then bar 6, bear bar closing on slow. Bar 7 is the first pullback for these 4 bars, 1, 2, 3, 4. And you can see the short worked. If you just mark your order to short on bar 7, you would be in profits right away. Bar 8, bear bar closing on slow, and then another pullback, 9 and 10. 10 is a form of a low 2 if we're counting the high, or if this is a high 1, this is the first pullback. If this is the low 1, bar 7, and then bar 10 is the low 2. Problem with bar 10 is it's coming at a better price, but there's so much bearish momentum, bulls couldn't even. Well, look at the 50%. Bulls buy the high of 7. They buy more lower. They get out at 50% here. Bears shorting right here can press their position. They're going to have to average in. Bulls that bought up here, they buy more lower, 50% mark. More sellers are overwhelming the buyers. And then we catch bar 11, the short down. And we make 2 to 3R very quickly. That's a good short. Bar 12, bad follow through, but bar 11 is climactic, so it sold off and then rallied. I had more time to talk in the Discord today because I don't work on Fridays. And I was just showing, I wanted to point this out, that 50% pullbacks are fractal. So bar 11 is a bear bar closing on slow. And then there's a spike on 12, but it reverses, so that's a pullback. So we have, in bar 11, it's 1 bar on the 5-minute chart. But on a smaller time frame, so we'll go down to the 1 minute. This is important for you guys to understand. So bar 11 on the 1 minute. You see 1, 2, 3, 4, 5 bear bars closing on its low. So there's 5 bear bars closing on slow. Keep that in mind. 5 bear bars closing on slow. Market pulls back. Bulls that bought up here. I'm going to delete this. Bulls that bought the high of 10 buy more down here, right around support. Rallies. Bulls sell out the same place. Bears are going to front run. Bears made 1R shorting right around here, so they're going to add to their position. The front running bears add to their position. Bulls are selling out of longs. And us second leg traders have a limit order sitting at the 50% pullback because we understand this dynamic. And that causes a quick scalp, 14, 15. You make 1R very quickly. Now we're going to fast forward. So Remember, this was more than 3 bars closing on its low, bar 11. From here to here was about 5 bars. That's a 1 bar, so that's 1 bar on the 5 minute. But there is 5 bars within this bar. Now look at 14, 15, 16. Wait, excuse me. 15, 16, 17, 18, 19. This is 3 or more bars closing on the 5 minute chart. So if price action is fractal, same situation. Bulls are now trapped right around the high of 15 because there's a tail there. So they're gonna, if there was, so bulls bought this, or that tail wouldn't be there. Bulls buy here. Bulls buy the low of 19, and then the market rallies. So we're in a trading range now because we're past leg 3, leg 1, pull back leg 2, pull back leg 3. The pullback was deeper, but look, I didn't take this trade. I was just trying to explain in the Discord today how this is fractal. Same way that this worked, more than 3 bars on the lower time frame, pullback, 1 hour's amount 15, more than 3 bars on the 5 minute time frame, deeper pullback, trading range behavior, but you have to sit through a extended move here. It worked. 1 hour was hit on 48. Understanding the similarities is that it's 3 bear bars closing on slow, bulls are trapped, the scalp worked. 3 or more bear bars closing on slow, bulls are trapped, the scalp worked. That's the similarities. Now the difference between this is the market cycle. And this, we're still in the channel phase of the market cycle, so it worked quick. It was a scalp. Now we have this leg put in. We have more than 3 legs. That's trading range behavior. Understanding the market cycle means that you might be seeing through a deep pullback, or you could or you could draw this. So instead of having a limit order at the 50% level, you can draw it, wait for some sort of failure for more confirmation, and then hit in. I just have the 50% level. I already have the limit order sitting there, but I have taken that type of trade too when I was like, I want to see how it fails. In trading ranges, second leg traps are very common. Leg 1, pull back leg 2, that's a second leg trap. Your stop would be up here, entry down here, and you make 1 R. Many ways to play it, but what I'm trying to emphasize is 1 bar closing on its low is 3 or more bars on a smaller time frame. Then we have 3 or more bars on this time frame, and the same trade worked from a fractal perspective. It's really important that we start to grasp that. You don't have to place trades around it. You just have to start kind of thinking about it. Okay, I want to really gear these things towards trap traders, and I'm starting to understand the better we understand the context, we don't have to just talk about like bear bar closing on slow. Look at the tail on 15. Those are bulls buying, and then they're trapped, they're underwater, they're going to sell out. So we can say bulls buy here. Bulls buy more at the low of 17. Hold on. Oh, it's going to be like this. So we see that 15. We could put this fib here. We could put the fib there. I'm going to put it here, or you can put it there. It doesn't matter. Bulls are trapped here. They buy more lower. Look at the 50% level on 18. There's another scalp. That makes resistance. When bulls are trapped and the market goes past them, it's support turn resistance. 18 tested resistance, and you can make one R very quickly. That's a quick trade. I want to take that trade because we're in the third leg, but I do have a setup that is similar to this. It presented itself actually on 27, but I didn't. Again, I'm really up today, so I didn't want to mess with my P&L. Took that trade. It worked out great. Got 2R, and the overnight session was great. So here, bulls buy here, stop loss here. They're taken out. They're gonna buy more lower, so you could say they buy some here, or no. My bad. For this setup, we're gonna look at trap bulls. So bulls stop loss gets hit. They're gonna buy more when price comes back to the break-even price, the low of 27. That's where their stop's at. They're gonna sell out of longs. They're gonna sell out of longs for break even. We could have an order sitting at support turn resistance and scalp out. The other type of trade would be the same thing, 50%. The high of 27, bulls buy more here. Look at 33. Touches your entry, boom, you're out on 34. You see, we can start to get really nerdy with these kind of things if we focus on trap traders, understand the context behind the moves we're trading. It's really important. Again, this is getting confusing. Ask me questions in the Discord because it's important. It goes context and then entries. If you get the context right, the entries will just kind of fall in your lap. Trading range behavior. So we kind of zoom past this. We have a rally here. I like this trade too. Didn't take it. The bulls that bought the high of 22. So bears are short down here. They're trapped down here. They're going to short more either here or here. When price comes back to the 50% level for the bears. So it could be here. Could be here. I would do it like just 3 bars because that's the pullback. You go for the bulls that bought this, made 1R within 2 bars. Price comes back. Look, you get filled on 32. You exit on 33. This is the old 50% level. So bulls are taking profits right here, and that creates a sell. I hope I'm not confusing anyone. This is how it works. You know, when you buy the market, you sell out of longs. When you sell the market, you buy back shorts. Let's talk about gaps real quick. We have a lot of gaps on the page. We have gap here. Kind of jumping around. I didn't realize I've been talking for 15 minutes. I like to keep these around 20 minutes long. Again, gaps show us traders are trapped, and then when gaps start closing, we use that as context to know that we're transitioning into a different part of the market cycle. So bulls close this gap. Bulls create a gap, but we're in a trading range, and now these 2 gaps get closed for that bar. And then look, we're still in a trading range. Bulls actually can't close this gap. They don't get more than, I consider a gap. This is from Ali Moinafsari's paper. A gap is closed when there's 2 closes above it. So for the bears, they have to get the bulls have to get 2 closes above this red line. So this gap stays open. It acts as resistance for the rest of the day. It gets tested twice on 43 and 46. 46 is a big reversal bar. I like that for a market order short. It's not something I would take because I don't trade market orders, but that yielded 1R, 1.5R. So just about 1.5R. You take a short here, you put your stop up there. You're catching the leg 2 of this move down. So 1 second, guys. My mouse is stuck. Okay, you're catching the leg 2, leg 1, pull back, leg 2 at a new low. We're in a trading range. Bulls bought that, hoping for a rally for the rest of the day. They do get a strong leg 1 move here. This leg 1 is showing up for its own leg 2, and it does. And just how the bears got a deep pullback, extended pullback here. Trading range behavior, bulls are getting a deep pullback and an extended pullback here. Tight trading range for the end of the day. Bulls snap and finally get that leg 1, leg 2. Leg 1, pullback, leg 2. Kind of zoom past this a little bit. I really want to just take the direction of talking about context and trap traders through the breakdowns and the memberships. The memberships I'm going to be talking more about my trades and how the traders are getting trapped. And yeah, so let me know if this is making sense to you guys or if I'm just rambling all over the place. I do think it's working. Again, you know, one of the members made $3K on a Top Step account, so that's great. He's just waiting for the deposit to hit. That's just a great way to end the weekend. So hope you guys have a good one. We have 1 week left in June, then we got 5 trading months left. Let's finish it strong. And yeah, if you learned something, share the show. Don't be a hoe. I'll talk to you guys on Monday. I got 2 membership videos dropping Saturday and Sunday, so stay tuned for that. Have a good one, guys. Talk to you later. Thank you for your time. Bye.